Welcome, everyone. Welcome to our audience, including Logic subscribers and new readers. For newcomers to this event, The Logic is an independent news publication that reports on Canadian business and tech. We cover everything from the macro economy, EVs, crypto, IPOs, and so much more. In addition to our reporting and daily newsletter, subscribers also get exclusive access to monthly insider events like these, company sentiment analysis, community surveys, Slack channels and job postings, and so much more. I'm April Fong, executive editor of The Logic. Every quarter, The Logic holds a call on the trends and things to watch out for in the Canadian economy. And today, there will be no shortage of things to discuss. I'd like to welcome Kevin Carmichael, economics columnist, editor, and editor-at-large, and my dear colleague. A reminder to everyone to please ask questions throughout the event. You can do so in the chat or under the question section at the bottom right-hand side of your screen. We'll try to get to as many of your questions as possible. We want to hear from you, so please do ask your questions and we'll make sure that Kevin gets to them. Kevin, welcome. How are you today?
I'm good, April. How are you?
Good, thanks. It's one day after the Bank of Canada's interest rate announcement. They were widely expected to hold on interest rates. What was the biggest surprise for you? You were inside the lockup yesterday.
Right. Yeah. Biggest surprise. I guess the biggest surprise is the Bank of Canada's revisions around growth, specifically around what's going on outside of Canada and the U.S. They raised their forecast for the U.S. growth to almost 3%. That's like a 1 percentage point increase. That's pretty big. And the last revision was like at the start of the year. So over 3 months, things have evolved that much in regards to the U.S., which really caught me a bit off guard. I mean, we've seen a bit what's going on down there with these surprising growth sort of month after month, and that's going to have ripple effects in Canada too. Perhaps put off the need to do some serious things over the longer term, but for now, the U.S. is helping us achieve that soft landing that Tiff Macklem so badly wanted to get a couple of years ago. Few thought he could do it, but it looks like we've pulled that off.
The Canadian, what their expectations are for Canadian growth are stronger. It's on the back of U.S. growth, as you just pointed out. Are we falling into a trap of relying too much on our southern neighbor again?
Excellent point. I mean, in the short term, maybe, because as I said just a minute ago, I mean, that's going to give us an opportunity to put off some hard decisions around productivity, around housing, around some of the things that have really emerged over the last year as serious problems facing the Canadian economy. These growth numbers make things look a little easier in the short term, and I just don't think we should be approaching the economy in that way. There's serious vulnerabilities out there that need to be addressed. But yeah, definitely there is a trap that we just continue to tag along behind U.S. growth, the U.S. economy yet again. And that'd be a shame, because that's I think some of the issues, it feels like a crisis. In some ways it is. It's probably not as bad as it feels, but as you know, April, I mean, it feels like in a democracy these days, you need to create these crises to actually get some things done. So you're starting to see some movement around housing, starting to see some movement, at least some interest in productivity, maybe not so much movement yet. But the policy community is starting to talk about these things. The business community is starting to talk about these things. So we are seeing some action, and it would, as you suggest, be too bad if we decided, well, hey, things don't look so bad, so maybe we can put some decisions off for a bit longer. I don't think we can really afford putting these decisions off any longer.
What do you see? You mentioned serious vulnerabilities. What do you see as the biggest vulnerability right now?
Well, the biggest vulnerability is productivity, and obviously that's a difficult concept. I mean, we've people in some ways dismiss it in that it's something that we've been talking about for decades, and one of the reasons we haven't addressed it is, again, that issue that we haven't really had to, because of our proximity to the U.S. and the strength of the U.S. economy for so long. It just kind of made it so we could just sort of move along at a pretty decent pace without having to do any sort of, or make any difficult decisions to sort of generate some of our own economic momentum here at home. a way to think about that is the Bank of Canada's revisions around what it describes as sort of its potential growth, and that's basically the speed limit, the speed that the Bank of Canada thinks the economy can go without starting to stoke inflationary pressures. It actually raised the speed limit over the short term for the rest of the year. That's entirely because of population growth. So we've got a lot of people out there who are buying things, willing to buy things. That means we've got a lot of room to grow. But the other piece of that potential growth is productivity, and productivity, of course, is negative. So really the way to think about all that population growth is like a missed opportunity. Those are, so we've crowded people in. So, we've created demand that way, but we're not fully utilizing all those people the way we could because of the negative productivity. And that's going to catch up with us just in a year or two, based on the Bank of Canada's projections. That potential growth rate, that speed limit, drops all the way back to about 1.5% over the next couple of years. This year, as I said, 2.5%, which is pretty good, but it's a bit of a mirage. It's really something around 1.5%, which is not great growth, really.
Let's talk about what the market is really focused on, which is, when is the Bank of Canada going to move on cutting rates? It said that it's expecting inflation to average 2.6%. A June rate cut is in the realm of possibilities, Tiff Macklem said during a press conference. But that's on the condition that if inflation stays muted in the next few months. What do you think could pose a risk to that view?
The risk is sort of what we're seeing in the U.S. And the other thing that happened yesterday, alongside the Bank of Canada decision, is another inflation number coming in hotter than expected in the U.S., which anybody paying attention to markets would have seen the reaction to that. They were all down yesterday, and that's because people are assuming that hotter inflation is going to force the Fed to wait that much longer to start cutting interest rates there. So that's probably the bigger risk, or the biggest risk in Canada. Certainly the thing that the Bank of Canada insisted that it's focused on. It likes the way inflation has broken over the past 2 or 3 months. The reason Macklem said June is within the realm of possibilities because inflation has sort of move back toward the 2% target in a way that makes him confident to think that it should get there, all things equal. But inflation's been surprising central banks of late, and and that could Canada's not beyond being surprised in the same way. It's not outside also the realm of possibility that inflation gets sticky and the bank is forced to sort of disappoint those who are so badly clamoring for a rate cut. So that's the thing to keep an eye on, April, the inflation data, and if it continues to break lower, then June cut is definitely a possibility. But if it gets sticky over the next month or so before that June decision comes around, probably won't see a move.
Tiff Macklem also named a number of global risks that the Bank of Canada is keeping an eye on. Global tensions, shipping disruptions. What jumped out at you from the bank's list of risks?
What jumped out at me about the when it comes to the risk profile is just what's going on around housing, I guess, at the end of the day. You go back to the sort of the main risk they highlight at the end of each of their quarterly economic updates. And, swinging back to the housing story, I mean, we know that that housing inflation is severe. No one really sees that coming back anytime soon, given the supply mismatch or the mismatch in supply with all that the population growth that we've seen over the last couple of years. But the one thing that's been working like it's supposed to is that prices at least have stopped skyrocketing like they have for so long in Canada. They sort of leveled off and even come back a bit. But the Bank of Canada acknowledges that there's still the risk that home prices could reaccelerate, which of course would make that housing story that much more severe and that much more of a serious pressure point on inflation. And that's not out of the ordinary, that's not out of the realm of possibility at all. We kind of think that prices have leveled off because interest rates are so high. But I happened to see some some commentary by mortgage brokers yesterday, sort of urging their clients to get back out there. This is the moment, beat the rush. You can see that interest rates are coming down, and so why don't you get out there and start getting in line and looking for that house again. And that's one of the things that those who think that the Bank of Canada, or those that are pushing for a summer or spring or summer rate cut, are getting ahead of themselves. They worry a lot about a rate cut sort of coinciding with that spring and summer home buying season, and just sort of lighting another flame around that market. So that's probably the biggest risk, I think.
That's interesting. I'm going to take a question from the audience, from Craig Tatterin, who also has an anecdote to share from a mortgage broker. He said that the interest rate freezes, the carbon tax, and the lack of affordable rental housing are two of the biggest inflation drivers, both of which are the product of federal government policy. Do you think there's any merit to these claims? That's what Craig's asking, or is he just playing his book? Is the mortgage broker just playing his book?
Yeah. So it's probably the mortgage broker playing their book. I mean, it's it's a group of people who've done pretty well for themselves over the last few years. I'll bite on the carbon tax, though. I mean, I don't think that's particularly inflationary. I mean, maybe at the margin. I mean, the Bank of Canada has been forced to address this numerous times over the last couple of years. I mean, they get a question on it from conservative MPs every time they arrive at a parliamentary committee up on the Hill. So yeah, it's on the margins, it's there's a bit of inflationary impulse there, but don't forget that there's some rebate checks that go along with that kind of keep everything in balance. Maybe not perfectly, but somewhat so. So my best read on that is that carbon tax isn't particularly inflationary. I mean, lots of people would disagree, but my own assessment is that it's that argument is overdone.
Speaking of housing and taxing and policy, let's turn to the budget, which is coming out next Tuesday. You've written about Canada's policy making around pension funds, and that rating that pension funds isn't the answer to productivity woes, weak productivity in Canada, and that Canadians need to earn it. What did you mean by that, and how should a regular Canadian worker think about that?
Yeah, well, maybe less directed at workers than at the people who employ them. But the point of that is simply that the pension funds are pretty a sophisticated group of people who have gotten very good at deploying the contributions that we all make to the CPP and our various other public pension funds in ways that are going to maximize return on those investments. And the record over the last decade shows that they're particularly good at it, certainly relative to their peers. The Canadian pension funds are all in like the top 10, top 15 when it comes to returns over the last decade or so. And the other thing to keep in mind is that if there were good opportunities for them to deploy that money at home, they probably would do so, if only because they're here, they're based here, they have an information advantage, presumably, on all their competitors around the globe looking for the best return on their money. So if at the end of the day there's not as much money from those funds staying here as we'd like, that's probably because there aren't enough good investment opportunities for those fund managers to deploy that money here. So if the group of people out there, at least my opinion anyway, like clamoring for that money, if they want a piece of it, then do the things that are necessary to make companies, projects in Canada more investable. And we haven't seen we just haven't seen that. I don't think to the extent that we need. Like the policy decisions haven't been made to make those infrastructure bets in Canada, like the kind of bets that the pension funds need to make, for example. So yeah, that's the point. Like just I think by going after the pension funds in that way, we're risking the easy path rather than doing the hard things it take to actually be competitive in the global commodity or the global economy the way it's structured now.
What are you expecting next week when it comes to what the government will say on pension funds. In the fall economic statement, Minister Freeland had said that they were going to look to work collaboratively with the pension funds to see if they can invest more in Canada. What do you think we're going to see in terms of the implementation of that?
Yeah, so I guess I don't know. My best guess on reading the tea leaves and some sense of the way this country tends to work is that there's enough controversy around this that the government probably won't rush into it. The fact that language made it into the economic statement certainly suggests that there's eagerness, there's interest in around doing something around this question. But I don't sense that there's a consensus enough yet to allow the government to move forward too aggressively at this stage. So we might see something. It might seem more of perhaps a commitment to talk about it a bit more. Maybe strike a committee or have some sort of try to strike some sort of a dialogue. Maybe get to a consensus. But I certainly don't sense that there's enough consensus around the issue at this stage to actually see something aggressive like a mandate or insisting that the CPPIB or some of the others actually invest more in Canada. But there's definitely interest, and that interest is coming from coming out of this debate around productivity. People recognize that the investment's weak. There's a lot of holes out there that need to be filled, and kind of desperately looking around to think where the money might come from. And the pension funds certainly make an attractive target. It just needs to be more thinking there, I think, before we really sort of lean into that option.
Let's take another question from the audience. Abby's asking, what are the possible short-term policy solutions, if there are any, to address negative productivity? And I should add, we did end the losing streak in the fourth quarter. So let's see if we can keep it up.
That's April, you might have hit on the best short-term solution to sort of turn things around, and just hope that there's something in the math that hasn't been coming together quite right over the last year or so, and it's making those numbers look a little worse than they actually are. And there is something to that argument. I don't mean to be too flip. I mean, for example, Stephen Poloz, the former central bank governor, has pointed out that the fact that the Trans Mountain pipeline is now online and about to start pumping oil is going to have a positive effect on the productivity numbers. And the reason that is it's now actually contributing to economic growth. It's now generating output, whereas for the last number of years as it's been being built, it's actually been a drag on productivity. So it's a negative force on productivity because pouring in all that investment, yet having nothing to show for it. Now we have something to show for it. So that's going to be a positive input in the math. So things like that could make it the productivity numbers start to look a bit better. But that's in my estimation, the only thing that could sort of bring a bit of a short-term turnaround, because unfortunately these issues there is no short-term solution. But to the extent there are, I could offer two. We could do something to do something about interprovincial trade barriers. That's something that keeps coming up over and over again.
Yeah.
And that's like an instant solution. It's like open up the market for the country's, most productive, most ambitious companies. Right now, they're often blocked and just trying to do things in their own home country. Never mind trying to go overseas and build market share there. So that's one thing. And the other is, figuring out a way to unleash some more investment. I mean, I suppose there'd be those that would argue that rating the pension funds, as I've decided to characterize it, would be a short-term fix, and I suppose it would be. But when you start thinking about short-term fixes like that, you have to start, sort of gaming out the longer-term ramifications for that. And then, so of course, when it comes to the pension funds, it might look like a nice short-term fix, but then think about where that leaves us 10 years from now, when more of the Canadian population is going to need or going to be wanting to draw on those pension contributions. And have we hurt ourselves there by forcing those funds into investments that are less beneficial than they might have been otherwise?
Yeah, it's certainly something to think about, and possible trade-off, right?
Right.
Another question from the audience, which is related to what you're just talking about. The Trudeau government has been releasing, made a number of announcements over the last week or two, pre-budget announcements, housing, food program, and the AI investment. What do you think is going to come from the budget in terms of initiatives to address productivity?
Um,
And sorry, and I should add, because Colin brings up a really good point, which is would be despite reiterating their desire to cut spending.
yeah. So I guess the answer to that is I don't know, and the reason I don't know is because I'm not sure what else they could put on the table at this stage. I mean, I think the best thing that the federal government could do for productivity at this stage is maybe do two things. One, to stick in those sort of fiscal guardrails that the finance minister has set up put in place. So she's had several over the last few years, but she re-upped the idea that she's going to sort of try to move forward within a set path and pull in the spending just a little bit. I think that could be an important thing going forward, and just that it would just give a certain sense of calm to the investing community that Canada hasn't totally lost the plot, that it's still a pretty stable place to invest, that governments aren't out there throwing money around willy-nilly,
Mm-hmm.
and give them a little more confidence that inflation is going to come down here, maybe unlike the US. Maybe all these things start to play into to an advantage here in Canada, is that we can become one of the few big economies in the world that kind of have their finances and inflation and some of the big macro problems under control. So I think that would be one thing that you could do, and I sense that there's some willingness in Ottawa to do that. They've got a lot of convincing to do. Obviously, people have kind of given up on them as being prudent fiscal managers, but perhaps the finance minister could prove them wrong, and that might be a positive, send a positive signal to investors out there. So that'd be the one thing they could do. The other would just be to show that they're moving forward on these all these programs that they put in place, and are going to be focused on actually getting that money flowing into the economy and locking into the various incentives that they've put in place around things like clean technology and other things to give people a feeling that these things are actually going to work. Like taking, for example, like the incentives around carbon capture and that sort of thing. I mean, lots of good
Mm-hmm.
programs in place, but they aren't moving, they aren't being implemented. So
Yeah,
I think that might be the best thing that we could hope for in the budget next week.
they've got to follow through. They've
They've
got
got
to
to follow
follow through.
through.
Yeah. You've written recently that businesses in Ottawa are in back and forth. Ottawa says businesses should invest more to increase productivity. Businesses say Ottawa should do things to prevent, uh, shouldn't do things to prevent their returns on investment. You actually describe this as a kayfabe, which is a term to describe a scripted outcomes in professional wrestling. First of all, are you secretly a wrestling fan?
I'm also secretly a wrestling fan. I'm a fan. I'm a fan. As I said to one of our colleagues the other day, I'm not so much of a fan that I spend real money on it. Although one of these days maybe I will. But I keep track on YouTube for sure.
Okay, well, we want to see more on YouTube. We want to see more economics and wrestling columns for sure. What's the big story that do you think Canadian business is watching for in the budget? As I said, there's this back and forth exchange that's become pretty fierce in the last couple of months.
It's become pretty fierce, and it's probably going to get even more fierce because you see this week that suddenly floating around is the idea of a wealth tax and this sort of thing, perhaps higher corporate taxes. So yeah, it could get interesting. Maybe that'll be the surprise that comes out of the budget next week, April. Um, Look, this is probably something that's gone on in Canada even before my time, but it's something that I've been writing about and trying to sift through essentially for as long as I've been doing this work. Is this back and forth between policymakers in Ottawa and the business community? Neither seem to be able to connect. It's been a long time since I've seen any sort of real coming together of those two groups. It seems as bad now as it's ever been. The business community insists that policy is blocking them from doing the things that they want to do. the policymakers insist the businesses have not readjusted their profit expectations to the times in which we now live. Maybe look, maybe I'm suffering from a bit of Stockholm syndrome, in that I spend most of my time around the policymakers, and less around what's going on in Bay Street. So I'll acknowledge that off the top. And our friends up there in Bay Street want to get in touch and tell me why what I'm about to say is crazy. I welcome them to do so. But I do sense some unwillingness on the part of the business community to accept the fact that it's not going to be as easy to make the kind of profit margins, to do the kinds of things that they've been doing, um, uh, over the last couple of decades. And that's simply because, the world changed. Like all this metaphors that we talk about, whether it's climate change, whether it's, demographic change, all these things that I write about most of the time, and not just me. I mean, everybody out there has been talking about this kind of stuff. I mean, that's just going to change the way the economy works, and it's going to make it that much more difficult to keep those profit margins in place, to keep those hurdle rates in place. But at the same time, lots of opportunities. So it doesn't mean you can't make money. It just means you might not be able to move forward with the same sort of expectations that you had in the past. And I do sense those expectations have become something of a block right now, and that people are sort of sitting back, waiting for that perfect investment opportunity that's going to allow them to get that profit margin, for example, that they've become used to, rather than taking a risk on a cost benefit analysis that suggests you might be able to get 5% instead of 7. Seems to be reluctance to take the 5%. And more of a willingness to, or more of a desire to sit around and wait for the 7. And the 7 just might not come around anymore. The things have changed that much.
A new normal. Let's take another question from the audience that's related to making money. Do you think, this is from Andrew Shrum, do you think we're seeing some opening for the IPO market? And I know that you've had a conversation with the TMX CEO recently too. So will the public markets be more attractive in the coming months?
It feels like it. I mean, you noted that conversation with the TMX,
John McKenzie.
John McKenzie, the CEO there. I mean, so the fact that McKenzie is sort of pushing himself into the policy debate, I find interesting. You don't see that every day. The Canadian, corporate community tends to stay in the background and let their lobbyists do the work for them. So the fact that he's sort of putting himself out there and pushing on some of these things suggests to me that there could be some movement around policies that might open things up around public markets a bit. And then you certainly get the sense that the IPO market is about to break open, if only because it's been sort of stagnant for as long as it has. And I think everything that we're seeing in the US is starting to stoke some excitement again, based on what I see, based on what people tell me, that should have a positive carryover effect into Canada. I mean, you see the Reddit IPO and those things, like lots of people out there talking about those decisions to go to market as being sort of the start of a revived IPO market. So it feels like that should happen here. There's certainly enough money out there, and there's certainly enough opportunity. So yeah, I mean, I guess I don't have perfect insight on that, or foresight, I guess I should say, but it feels like they're about to see a shift there. Certainly would help that productivity problem.
The other thing that complicates that picture, though, is that so many tech companies, Canadian tech companies, have actually chosen to go private and leave the TMX. So I think, or TSX, and I think that poses another barrier for those who are considering an IPO.
That makes sense. You know what? Honestly, it's another reason to get some clarity around the interest rate story. And might even be, all things equal, the kind of variable that will come into play at that decision meeting when the Bank of Canada or the Fed or all the central banks have to decide which way to go. It does feel like we're in a bit of a waiting period where people are waiting to get just a little more clarity on where the interest path is headed, so then they can, as you know, April, all those decisions are basically come back to the interest rate setting at the end of the day, and what that, the cost of those risk-free assets that are tied to the interest rates are. And so those are fundamental to the math that goes into deciding how to go forward. So you do sense that there is a bit of a holding pattern, maybe even a game
Yeah.
of chicken, in some ways, that people just sort of waiting to see the interest rates come down even once or twice, and then they'll go. So I think, the central banks aren't oblivious to that. So they certainly aren't going to move. So the central banks
Hmm.
aren't going to move until they're confident inflation is broken. But I think those kind of calculations will be on the table when they're, at a decision point where they're like, they could go either way. Those kind of calculations might help them tip away toward a cut rather than holding out.
That's really interesting. Speaking of things that are broken, the Bank of Canada's Senior Deputy Governor Carolyn Rogers said recently that it's time to break the glass when it comes to Canada's weak productivity. It's an emergency, she said. Do we need an Australia Productivity Commission? Would something like that help? You wrote about this in a recent column, and it was proposed by former Finance Minister Bill Morneau. The Australia Productivity Commission, for those who don't know, is something that provides neutral and economic and policy assessments to ministers. Do you think something like that would be useful in Canada?
I do. First, excellent transition, April. That was fantastic. Broke into breaking glass.
Yeah.
Well done. But do I think a productivity commission would help? Yeah, absolutely do. I mean, it's just something that Bill Morneau pushed hard in his political memoir, which I found interesting because you tend to read these books from policy oriented people like Bill Morneau, and they'll go down the list of things we need to do to improve productivity, and we need to boost investment. And that could be around cutting taxes or whatever. The long list of like policy prescriptions that make the top three of whoever's putting forward the ideas. But Morneau instead focused on process and talked about how what we really need to do is to figure out how to work together. And part of his argument, along with why it'd be so beneficial to have something like our productivity commission, like they have in Australia, is that at the end of the day, for this to work really well in Canada, the provinces and First Nations and federal government are going to have to figure out a way to get together to make this country work to its full potential. And that just hasn't been happening the way it used to. Hasn't been working particularly well at all of late, I would argue. So what a commission does is it's a neutral place where the right kind of people would gather, talk about these ideas, put neutral ideas on the table, and it sort of takes away the political element of it, or the partisan element of it, I guess is probably the better way to put it, and might allow or create the conditions at which some group of politicians in a particularly partisan and politically charged environment might be able to get together to make some tough decisions. So I think that's the most important benefit of it, that it really help kind of somehow pull the federation together a bit, and just sort of get us going on some of these questions that are tough. And if there's not even a sort of a central place in which you can sort of start a conversation, I mean, they're just not ever going to take off. It's going to be, a future of think tanks continuing to throw more and more ideas on the table, people like me riffing on those ideas, and then, that's kind of the extent of it. And I think that's what we've been doing for a long time, and that's why we have negative productivity growth.
Collaboration equals productivity is what I'm hearing. We now have, it's been 3 months since you and I last had this call. We now have a full quarter view of 2024. What was the big economic theme that you saw in the start of the year?
I think two. I think it's we achieved the soft landing. There's still kind of thought we had it nailed by the end of last year, the start of this one. But I'll speak specifically from the Canadian sense. There was still a little bit of doubt. Like the Bank of Canada was talking about the economy effectively stalling at the end of last year, and their forecast at the start of the year had it not doing much better than that. The new forecast shows that we're fine. We're back to trundling along, which is much better than some of the catastrophes that were in the air a year and a half ago. So that stands out. So we avoided the worst. And then the other thing that stands out is what we started talking about is just what's going on in the U.S. and what that means for us going forward. And we've talked a lot about the dangers of what that can mean and actually trying to make difficult decisions in Canada. Like that's probably one of the great roots of Canadian complacency, at least when it comes to economic decision making, is that the fact that we live next to such a dynamic and big economy, it kind of makes making the art of making money kind of easy. Relatively easy, I shouldn't say. I don't mean to denigrate the art of making money. It's difficult, but it's easier here than it is in other places, thanks to our proximity to the U.S. But we'll continue to benefit from that, and there'll be spillovers and some positive ones. The thing that policymakers ought to do is take advantage of that and think about what could happen if we actually made some of those difficult decisions around productivity and actually added some of our own momentum to that growth rather than being pulled along by what's going on in the U.S.
Certainly. So I'm going to take another question from the audience and kind of combine it with something that I'm wondering that you can end us off with. A question from Rob is that there's billions, maybe trillions in U.S. commercial real estate debt that's coming up for renewal soon. And we're into a very soft commercial real estate market, probably driven by, changes in retail vacancies in office buildings, as many of us are working remotely. Do you think that Canada's commercial real estate is equally exposed? Is this a risk? And I'll give you another question on top of that. What's the biggest economic risk you think, Kevin, as we look to the remainder of the year?
So commercial real estate is a significant one. Whether it's this, first thing I'll say is I guess I don't know, because I haven't dug into that issue as much as I would have liked so far. But my sense is that it's probably not as a bigger risk here as it is in the U.S., simply because our regulatory structure is that much stronger here. So that's not to say that the regulators are perfect and have their eyes on everything, but I think the system sort of post-financial crisis is set up in Canada in such a way that that's probably, while maybe not so solid that it's something that we can shrug at, and but it's probably not going to it's probably contained the worst case scenarios, I guess, is a way I could frame it up. So I'm a little bit concerned, but maybe not really concerned. A positive thing we can do going forward is to figure out what to do with that commercial real estate. So I think we've accepted that work from anywhere is the new reality. Hybrid work is the new reality. So there's a lot of empty spaces. Rather than cling to those buildings or cling to some hope that people might sort of fill them up 5 days a week again, probably what we need to do is make some difficult decisions on what to do with that property. And at first seems like an obvious way to deal with this housing supply problem. Then you hear people talk about, well, it's not as simple as that. Okay, well, it might not be simple, but maybe we'll can do the hard thing and figure out a way to make all that space work for real estate, or you know what, if it's can't work for real estate, then let's tear it down and build a building that could work in those places. But those are hard decisions, and some people might take losses, but this gets right back to what we've been talking about for most of this conversation, April, is like, resisting the urge to sort of sit back and wait and hope that things will come together. It's kind of a moment we need to make some of these difficult decisions, and that might be one.
Yeah, it's maybe a way to reconcile the housing crisis and also the commercial real estate risk that we're facing.
I think so. I think so.
Um,
And I mean, sorry, go ahead, April.
what do you think is the biggest risk, economic risk for the remainder of the year? Not going
The
to let you
biggest
go on
risk
that
is,
one.
yeah, no, sure. Yeah, don't, I wasn't going to, I wasn't going to promise. The biggest risk, I think, and I hope this isn't too cute, but the biggest risk is that we just don't, you know, act on this productivity issue now. The biggest risk is that we continue to put it off that much longer. Um, you know, we're having a national conversation about it. That's the first time I've seen that happen. So people are seized by it. Um, but you know, you can't wait, right? This is like the reason that this is an opportunity is that the world's changing fast. All these meta forces are creating both all kinds of risks, but also opportunities. And so you see what's happening in the US, they're taking advantage of the opportunities. We're haven't quite seized on those opportunities yet in Canada. But this is the moment to, or someone else is going to seize on all of them, and we'll get left behind. So it's the opportunities are there, but we need to, you know, do it now rather than a year from now or 2 years from now or after the next election or whatever. Like, these are things that we need to start doing now. And so to me, the biggest risk is that that politics get in the way and we don't do anything for the next until the next election's over, or we wait for interest rates to come back to where they were, you know, 2 years before the pandemic. These kinds of things, if those, you know, that sort of complacency, I guess, to me is the biggest risk that I see going forward.
Thank you for that. We can't lag on our lagging productivity. Um, okay, well,
Nice.
I think that wraps up our time together today. Thank you so much, Kevin, for sharing your time and your thoughts on the latest economic trends. Thank you to our audience for joining us today, for taking the time out of your busy days to join us. Your subscriber support means a lot to us, and it allows us to continue producing in-depth, high quality journalism. If you're not already a subscriber, you should be. What are you doing? You can link to subscribe in the chat or visit the Logic's website. And thank you to our audience for your excellent, engaging questions today. I want to thank the Logic's business team. This event would not have been possible without you. And some things that I want to plug that are upcoming. If you don't have this already, this is Super Intelligence. Is Canada Ready for AI? Our first ever Logic book that was produced from the in-depth series that we had on Canada's AI advantage. One of my colleagues will be throwing a link into the chat. You can purchase the book there. Highly recommended if you're interested in learning our role in about our role in AI. We have an exciting roster of both virtual and in-person subscriber exclusive events planned for the year. Last night, we hosted our first ever Vancouver meetup, and thanks to everyone who was able to join. That was an incredible event where we talked about diversity and inclusion in the innovation sector. Next week, I'll be hosting a subscriber exclusive event with the Logic's Ottawa Bureau. My colleagues Murad Hamadi and David Reevely will be breaking down the federal budget one day after it's released. If you're a subscriber, keep an eye out for an invite in your inbox. And a save the date note. We're so thrilled to announce the Logic's 2024 Summit will be taking place on Monday, October 28th in downtown Toronto. To learn more about partnership opportunities and how to be part of the 2024 Summit, email my colleague, the Logic's Partnerships Manager, Ariel Lepper-Walker. Her details are in the chat. Keep your eyes on your inbox for all for invitations for future events. We've got a great roster coming up. And thank you to everyone who joined us today again, and to our subscribers who make events like these possible. Have a great day.